I think one of the biggest drivers for other than just simple supply and demand, there's not enough houses, which again is related to contractors, right? There's not enough supply of housing in Wyoming. And it's that's what's really continued to have the market be very stable. Like,
Hey, everybody, welcome back to another episode of the Richer Geek Podcast. Today, we have Casey Gregersen. He's the founder and CEO of Bighorn Capital Fund. He's a real estate investment expert based in Laramie, Wyoming. And we'll get into some details on why he's picking Wyoming. It's very interesting. He's got a decade of experience at Shell Oil Company and a successful transition entrepreneurship. He's managed multiple business ventures, including 7 Pure Bar franchises. Now he's leveraging his industry knowledge to help professionals achieve financial freedom through strategic real estate investments. Casey, how you doing, bud?
doing great, doing great. Excited to be on the show.
Absolutely. So I always start every episode, give us a little bit about who you are and what was the that transition moment that you decided, what, real estate is it?
Yeah, you bet. So my path was probably a lot different than most other people, coming from oil and gas background, right? So, and growing up, I wasn't like I didn't picture myself being a petroleum engineer. I actually I was always a math guy, got into engineering, and it was a big opportunity I had in grad school to be a petroleum engineer, which led me to work for Shell, actually down in Houston. And the nice thing I had though is when I went to work for Shell, I was an engineer, right? So after 6 months in the office or so, they put us out in the field, like on a drilling rig. So I was out there like drilling and fracking and doing all that on site. But the cool thing I had was I would work for 2 weeks on the rig, right on the site. And then after that, I'd go travel home for 2 weeks. And on those 2 weeks off, I didn't have to pick up my work phone or open the laptop or do anything when it came to working for Shell. So during that time, that's when I started investing in real estate. I'd actually bought my first rental property when I was going to school at the University of Wyoming. I grew up in Wyoming, right? Bought my first rental property there in college. And yeah, and then during those 2 weeks, I got that bug, right? I started listening to Bigger Pockets, Rich Dad, Poor Dad, and listen to podcasts. And I was basically like, I was consuming it by day, working in the field. And then on my off days, I was actually going applying it, right? I was finding rental properties. I was doing fix and flips. And it was really like, it's like kind of perfect storm to really get
Mhm.
started.
Yeah, it's my God, it's like everyone, if you could raise your hand and you're in real estate, who read Rich Dad, Poor Dad, and we're all, Robert, I was so lucky enough a couple months ago to go to a party and Kiyosaki was there. So I got to bend his ear because he was kind of like the grand mentor for all of us. Um, why do you think, you probably had a good, what is your why as far as with the real estate? It's a lot of people say, well, time freedom, all these different things. You probably had a good salary with the oil rigs and things like that. Now you're doing the real estate. Um, what's the why? Tell us a little bit about what was going on inside your head.
Yeah, it's a combination of things, and I'll try to keep it concise for you. But I mean, it started out working in the field, being away from my family, right? And if anybody watching this has seen the new series Landman, like that's actually an incredible depiction of what it was like working. I was in West Texas, working out there, away from my family, in a dangerous sort of setting. It wasn't that dangerous. Working for Shell, a big company, it was much more safe, but it was being away, right? And I was asking myself this question, right? It was like, but what if I didn't have to choose work over family? What if I could make this living and not have to be away from my family for 2 weeks? So I was able to manage that for quite a few years, right, while my kids were young. But where it really hit me, and it's a longer story, so I'll give you the cliff notes. But like I had came back to Houston and was working a day job, so I got to see my kids every night. And at this point, I had 3 of them, and I'll never forget it. Actually, it was during COVID. So like all of us in oil and gas, that was actually not many people know this, but when COVID hit, just a couple months after that is when oil went negative, right? It was a crazy time in the markets. They laid off 40% of our company at Shell. And I was lucky enough to keep my role, but I was still hustling real estate, right? I was building this. So I was really glad I kind of had that off ramp if I wanted it, but I wasn't quite ready. But here's where it really clicks, right? My new job is to go out to the Gulf of Mexico on a platform, right? And I had to go leave for like indefinitely. I actually had to go sit in a hotel room for a week and sitting there in quarantine before I could even get on the helicopter to fly out to the platform. Right. So I'm going there for a week, waiting 3 weeks, 3 to 4 weeks on a platform before I see my kids again and my wife. Right. And he was 7 years old at the time. He was my oldest. And he was really struggling with it. And I left. And I'll never forget it. When I left, I got out really late that night. And I'll never forget it. I'm driving out to the hotel in Houma, Louisiana. So if anybody's ever been out there, they know where I'm talking. So I'm driving and my wife calls and I'm about halfway through the drive and she's like, Casey, just checking in. But I don't know if you saw this, but when you left, your son, he chased after you. I had to chase him like two blocks down the street and trying to tell him like, hey, dad's got to go. You can't go. He's leaving. So I'll never forget that moment, right? It was like one of the hardest moments, like having to hear that. And then having like 3 or 4 more weeks of work just about to start. Like I was just going. All right. So that was one of the pivotal moments of like, all right,
Hmm.
I want to do like like I was already hustling and going hard in real estate, but I'm like, I'm going to supercharge this because again, I don't want to have to make that decision anymore.
Yeah, and that is big. It's definitely family. It's definitely security. So a little bit before we start getting into the details of Wyoming and what you do, how did an engineer's mind help you in looking at real estate and with the math and engineering and the ability to look at an asset and say, you know what, this works mathematically or this doesn't?
Absolutely. Yeah. I didn't realize it at the time how much synergy, but as I've gotten older and done this for more and more years, I realized, oh wow, there's these little skills that I picked up, whether it was being an engineer and just always being math minded, right, and just doing underwriting, right. It just simply not many people. I realize it's a skill I take for granted, but just being able to pull open a spreadsheet and underwrite a deal quickly and be like, hey, can I analyze this? This makes sense, right? So that's probably the biggest asset. But other ones that I learned was like even working for Shell in a big company, like we were very process oriented, right? And everything had an SOP. Like we were drilling wells in the West Texas or middle of Gulf of Mexico, and it was all about repeating it and starting to streamline it. So learning those processes, and then what I did is I simply like the first thing I automated was property management, right? I was doing property management from Houston and I was doing it on properties up in Wyoming and a little bit in like Dallas, Fort Worth. Like I wasn't touching any of my properties and I was doing it all. So one of the first things I did, and this was another thing I did during COVID when everybody was locked down, I'm like, all right, here's an opportunity to develop this system. And I wrote out all my SOPs in like Microsoft Word. I recorded myself doing it and I built a system where virtual assistants could do everything that I was doing and be able to do managed property from afar. So that was one of the things that, again, I had that experience of building out SOPs and standardizing. And then every time you do it, you go back and do an after action review and you go have this feedback loop where you go implement what you learned and do it again, right?
Yeah, yeah, it's absolutely. So let's get into what you're doing. You're out in Wyoming. For the rest of the United States, it's like, okay, is there a capital of Wyoming? What's in Wyoming? Do people live in Wyoming? That's just one of those kind of forgotten states, and that's probably good for real estate and picking up multifamily and single family houses. So tell us a little bit about why Wyoming and not Houston.
Yeah, you hit it on the head, Mike. That's literally my exact story and why it works so well. And I've literally juxtaposed, especially early on. Like my original plan was, let's get started in Wyoming because one of the first things was like wholesalers, right? So when you're not many people maybe know this in the real estate industry, but you can relate this to any industry. There one like a really easy way to get started in real estate is just go find deals, right? Just do marketing, find the deals, and then go find the end buyer, right? So I was doing that in Dallas Fort Worth, and I had owned a couple properties in Wyoming. This was like 2017, right? And I'm like, man, I wish I had a wholesaler in Wyoming I could buy deals from, rather than having to try to buy off the MLS. But
Mhm.
but I saw there's an opportunity. I'm like, well, why don't I just go do that myself, right? Why don't I? Because there's no competition. Why don't I go do it, right? So we started doing marketing, postcards, direct mail, radio ads, Facebook ads, you name it. And what I found was my cost per lead was so much cheaper in Wyoming versus Texas. And as I started to become part of other masterminds and see what other people that were doing this on a high level across the country, when I compared my cost per lead compared to what they were paying, it was considerably less. And even when I was negotiating, right? When I'm like having the conversation with a seller that wants to sell their house off market, like all my buddies here in Houston, they're looking at it, they're bidding against 5 to 10, maybe 20 other people that do the exact same thing as them. Versus in Wyoming, I'm the only one having the conversation, right? And the other kind of superpower or like niche I like about it is I grew up there, right? And I know how it ticks. Like it's kind of funny, but it makes sense. Like Wyoming is like 20 years behind the rest of the country, right? Literally in just the way they operate and their technology and like
Yeah.
just if you've been up there, you know what I'm talking about. And if anybody listened to this, they have. But that's why they love it, right? That's why people want to live there. But I like it's my little unfair advantage because I get it. I can speak to that. I can cater to that. But at the same time, I can come in and apply like technology and like marketing and different like innovative things that I'm learning here in Houston and across the country and apply it in Wyoming.
So, you know, discuss with our listeners a little bit about what it is you're doing. If it's single family, if it's multifamily, what are the type of things that you're doing inside of Wyoming?
You bet. So initially, we like a lot of people started doing single family, small multifamily. We've really found a big opportunity is in the multifamily space in Wyoming. So we're still doing like my marketing. We still do a ton of the single family and small multifamily stuff, and we'll fix them up and flip them. Because one big thing I haven't mentioned, got to yet, is the contractors, right? I think one of the biggest drivers for other than just simple supply and demand, there's not enough houses, which again is related to contractors, right? There's not enough supply of housing in Wyoming. And that's what's really continued to have the market be very stable. Like where I'm like, for example, in Houston, or I keep using this as an example, but you could say that is Las Vegas, Boise, California, right? Like prices, some of those have had a big swing when interest rates went up, right? So prices drop. We just stabilized, right? It stayed flat because granted it wasn't appreciating at 10 to 20% a year, right? But we were still getting appreciation and it was stable, right? Because again, of that constant need for housing, right? So that's been, I think, one of the biggest things. It's just stable, right? And that's allowed us to do single and multifamily. And then the last piece is the multifamily space, right? Again, back to the like Wyoming being 20 years behind the country. I can't tell you how many big multifamily assets we bought where they're still paying cash. They don't, all the leases are paper leases, right? There's no technology being applied. So, like, I mean, I love doing value add in
Mhm.
general. And I know I'm going like you could see we do a lot of different things, but I'm just finding an opportunity to where if we just go in and operate it like more professionally and implement even, not even talking AI, but just start to put in processes and systems, it's helping us bring value to the multifamily assets. And as we all know, when it comes to buying multifamily, it's all about value add. And we're able to do that with forced appreciation and improvements, but we can also do it by just improving operations.
hmm Now, are you seeing that there's in Wyoming, it might be like some of our assets that we have in the Midwest, the difference is Arizona, Houston, you get a lot of appreciation because there's a lot of the growth and maybe a little less cash flow. But I noticed that in like our Midwest and mountain type state assets, um, there's a lot of cash flow, but the appreciation is very small because things don't increase their value as quickly as the hot states or the hot cities. Is that what you're seeing in Wyoming?
Yeah. Wyoming historically has been like that, right? And if
Yeah.
you, again, go back, and we talk about this all the time, if you go back and look at like the year over year home values in 2008, 2009,
hmm
it was everywhere else in the country, it was like rough, right? It was a flat line in Wyoming. It was just steady, right? And it was
Yeah.
call it a blip, right? But ever since then, it's been slow and steady. And historically, Wyoming's always been, it's not like, yeah, it's not like Utah surrounding it. It's not
Mhm.
like Denver. I mean, at least not yet to where it didn't see these crazy appreciations. It's been
Mhm.
3 to 5% year over year. I mean, during the COVID years and interest rates dropping, you saw like the 5, 10% jumps. But yeah, it's typically been a slow and steady one. And I think what you're heading at, Mike, is the cash flow, right? Because prices haven't surged, it's been a good cash flow market.
Yeah.
And again, the reason I love it is Wyoming's, so you got Colorado that's blown up, you got Utah, Salt Lake City that's blown up. Now Montana's even seeing a big surge.
Oh,
It's
yeah.
got all the same geography, right? All the same demand, just less people. So I feel like it's still, and from a cash flow perspective, you can still buy multifamily, even small single family assets, and they could still cash flow, kind of like in the Midwest. But I just think there's a lot of upside just based on what's happening around it.
Yeah, very cool. So let's get into your company, what you're doing, what you're offering. You've now gotten to the point where, in order to grow, let's get some investors. So, are you doing syndications? Are you doing funds? And what does that entail?
Yeah, you bet. You might repeat. Sorry, it broke up for a second. Can you repeat the last part?
Yeah, when we talk about, the fund that you're getting ready to put out or you have out, what is the details of the fund? And tell us a little bit about what you're looking to buy and what's in it for investors.
You bet. So back to the sort of supply and demand and the like what we're seeing in Wyoming. It's again, it can be a blessing and a curse, but actually I think it's a double blessing. So the blessing again is low competition. We're able to find a lot of deals and we get it at a lower cost, right? But typically you would say the curse would be, all right, well now it's harder to go flip and sell this to another cash buyer. Like it is definitely difficult in Wyoming to be a wholesaler because there's not as many cash buyers and investors. But the way we've actually created an advantage to that is we become our own buyer, right? And that's what I've done for years and years. But to really scale now, because now I've got a full marketing company, I've got 4 different construction crews that do our work, and we manage all of our property management in house. But to continue to feed all that, like now it's all about raising capital for our fund. And that's why and to kind of go a little bit back to my story, and I remember telling you guys about how I had to make the decision of like, do I choose business or family, right? I got to go to the rig. I got to make my salary. I got to be away from my family. Well,
Mhm.
again, I pushed, right? And I didn't give up. And that supercharged me to like, hey, I'm going to go hustle and I'm going to figure this out so I could eventually have that freedom and make that choice, right? And now the where this all kind of blends together is I found that by building out these 3 companies, again, finding the deals, fixing it up, and property management, I found that I love processes and I love building stuff. But really, I love being able to help other people do the same thing because I know how that felt for me, and I've just had so many conversations with other like like passive investors that, and maybe they don't have the time or the resources. It's mainly usually a time thing, right? They're still in their W-2 job, and maybe whether they want to leave that W-2 or not, they have a time constraint, and they also just don't understand all the ins and outs of real estate like I do. So what I
Yeah.
found is my bigger passion, and it's actually a goal of mine I set a year ago, was to help 100 families achieve their passive income goal, right? And to do that, they can invest in things like my fund, right? They can also, there's a lot of people that are just like, hey, I want to get in on a deal up in Wyoming. Maybe they just want to come up and visit it in the summertime or winter, or they would like it because of the cash flow. But by helping these 100 people, naturally they love partnering in our fund,
Mhm.
right? Which is a great opportunity. But yeah, at the end of the day, like I've had really good mentors that have helped me and helped me to get to where I am. And I found that that was one of the biggest things that helped propel me was surrounding myself with people who thought similarly. So
Mhm.
anyway, I just, even like that go giver mentality, right? People have given to me. It's been really important to me to give back. So I'm really excited to help other people. Again, I'll summarize with this. Like I want other people to be able to make the same choice I made when it comes to
Mhm.
family or business, right? And whichever one, just at least be able to make the choice.
Mhm. And how's the fund set up? Accredited investors only?
Yes. So I have our accredited fund, which is Bighorn Capital Fund. Again, it's a playing off the mountains. I've always made that unique for Wyoming. So Bighorn Capital Fund, we have limited partners. This is for accredited investors. So we have a couple different options, and I'll just
Okay.
quickly highlight it. I
Yep.
created this customizable fund to give people multiple options. So we have, for example, we did a debt deal where it's a multifamily. We raised about 1.7 million, and we just did it as a fixed debt tool, right? But we also have equity ones, and that's the one I'm actually working on right now, and we're raising for. Really, actually, currently we're have an ongoing raise, and that was a more equity role where people can come in. It's a longer term one where we're going to hold for 5 years, right? But they get the equity upside, and probably the biggest thing is because he talked to a lot of investors is the depreciation, right? Because we're buying and holding real estate, we get the depreciation and yeah, and they get the upside. So I've just found investors are, it depends, right? Some people they want to be in and out and be flexible and have a fixed return because that's the easiest to understand. But other investors are like, you know what? I don't want you to give me all my money back in 6 months on a flip, Casey. I want you to keep that money working, and they
Yeah.
want the depreciation.
Yeah, absolutely. Casey, how can people find out more information about the fund?
Yeah, absolutely. So you could go to bighorncapitalfund.com. is one easy way. But also, I just encourage people, like, again, I want to help people out any way I can. Just go to my website or find me on YouTube, Instagram, whatever you guys use. It's just CaseyGregersen.com or Casey Gregersen on YouTube. As long as you guys spell my name, you'll find me.
And ladies and gentlemen, Casey Greg, Gregersen. Casey, thank you so much for coming on the Richer Geek. Is there anything before we leave that perhaps I haven't asked you, something that you'd like to inform our guests?
Yeah, you bet. I really said it pretty. Let me start it over. Um, yeah, I think the biggest thing, as I mentioned over the years, is working with like oiling. So let me try. Can I share one more time?
Sure.
All right, cool. I assume we can cut it. Um,
We can cut it.
Perfect.
Go ahead.
Perfect. Yeah, one last thing, Mike, I'd like to share is working with oil and gas professionals over the year. Like I've just found that a lot of those guys, they didn't have the time, right? And they didn't have the experience to invest in real estate. And it's just been really fun to help those guys because it's the perfect combination for me and them, right? They don't have the time, but at the same time, for me to scale in Wyoming, as I mentioned, like it becomes a capital game now because we can find the deal, we can fix it up, and we can rent it out. But if we can, I just love being able to partner with people to where I can grow, they can grow, and it's just a really cool relationship. So again, I just really encourage people, like if I give you my time, like I'm giving you my time because I want to partner with you guys and I want to make it a win-win.
hmm Absolutely. Casey, thank you so much for coming on the Richer Geek podcast. Hope you have a wonderful night and good luck with the fund. Take care.
Perfect. Thanks, Mike.